the group's ambitious plans to trim some of its mountainous debt and expand its operations. Adani Enterprises had planned to deploy 3,335 crore rupees immediately in the last 2 months of current fiscal and a total of 7,535 crore rupees over the next 14 months. As per the company's disclosure, 4,165 crore rupees was to be used for repayment of loans. 10,869 crore rupees was to be deployed in several projects of the green hydrogen ecosystem. Improvement works of certain existing airport facilities like the Ahmedabad Airport project and construction of Greenfield Expressway under its road and highway subsidiary. The FPO money was to come in 2 parts, half of the money at the time of the application and later on calls spread over 2 years.
अदानी एंटरप्राइज का ये एफपीओ बहुत ही सही समय पर आया है और हमारी 10 वर्षीय कैपिटल प्लानिंग का ये हिस्सा है जो कंपनी के फुल्ली फंडेड और डी रिस्क ग्रोथ प्लान के अनुरूप है. This decision will not have any impact on our existing operations as well as our future plans. We will continue to focus on timely executions and delivery of projects.
Adani Enterprises acts like a holding company for the group and has incubated new businesses in capital-guzzling infrastructure sectors. The company had actually planned to use the FPO funds for new sunrise businesses. Despite assurances by the group chairman, the bloodbath in the stock markets is expected to hit Adani Enterprises hard. The current stock market sentiment towards Adani Group will now force the Ahmedabad headquartered group to raise high-cost debt or scale back its ambitious expansion plans. With its share price dropping nearly 45% in the past 1 week, the company's power to raise loans against equity has also declined. The Hindenburg report has also international lenders to handle Adani Group bonds with kid gloves, with reports that at least 2 global giants have stopped accepting them as collateral for margin lending. The group may, as a result, be forced to raise funds at a higher rate than it traditionally has. The one big upside, though, is the group's commitment to green energy, for which the government has ensured easy funding. Bureau Report, Business Today TV.
It was a quick snapshot of all that's been happening with the Adani pack, and joining us also now is Nilesh Shah, Managing Director of Kotak Mahindra AMC. Nilesh, welcome. Last 20-25 minutes of trade, and while that pans out, the bigger question is this debacle, the withdrawal of the FPO, extraordinary circumstances and situations in the Indian market, and also for a large, fast-growing group like the Adani Group. Your first thoughts really, Nilesh, before all of us jump in.
From the investor point of view of the FPO, it's a very good move. They were staring at a mark-to-market losses immediately on investment. With the cancellation of FPO, that loss is avoided. So certainly beneficial for FPO investors. From the existing investors stroke lenders point of view, they have to reassess whether withdrawal of FPO will have any impact on the balance sheets or the growth plan. So essentially, depending upon where you are, you will have to evaluate your position.
All right. Udayan, let me come to you on the fact that, Adani actually went ahead with this move. I mean, is this unheard of, a 20,000 crore rupee FPO that he's woken up this morning and decided to return all the money back?
No, there are 2 ways to look at it, Aabha. If you're being charitable to Mr. Adani, you will say that he's taken the high moral ground and he's behaved honorably. That's one way to look at it. The other way to look at it is that, being a smart and shrewd businessman, he's realized that if he were to let this FPO go through and inflict these losses on his new shareholders, he would never have the face to go back to the stock market again to raise money. So I think it's keeping his future interests in mind as well, because people have long memories in the market. If you shortchanged him this time, I think the Adani Group would have been dead in the water as far as raising money from the Indian capital market in the future completely. Nobody would ever forgive him for this. So I think, and given what has happened over the last 48 hours, first with Credit Suisse and now with Citigroup, it is looking more and more difficult for Adani to raise money in the international market to aid his liquidity or his expansion plans. And at a time like that, he doesn't want to burn all his bridges and close options in the Indian capital market as well. So I think it's keeping those things in mind as well, and not just an honorable course of behavior that the FPO has been pulled. But I don't really remember an instance. I remember instances like Wokhart Hospitals, which were launching IPOs, and because the valuations did not go down, they had to pull it back. But having got it subscribed through whatever means, and then to return the money is something very unique in the history of the capital market.
Nilesh, one quick point on the risk, and those are my words, not yours obviously, to the Indian banking system. SocGen has estimated, and I'm trying to quote their numbers, they say, assuming no significant change in the debt structure over the past year, SocGen estimates Indian banks' loan exposure to Adani was close to $10 billion, just 0.6% of total banking sector loans of $1.5 trillion. And it goes on to say, our stress test signals no systemic risk for banks even in an adverse scenario. We've been getting questions, people are asking, people in the corridor also are asking, banks ka kya hoga, beyond the markets. Would you want to give us your thoughts on that point?
From a business point of view, the companies which we cover in Adani Group, their capital structure is fairly solid. There are assets on the ground. You can see their port functioning, their cement plant working, their airports functioning. If SocGen's exposure number is true, and we believe it is somewhere in that magnitude, the assets are very well there to back it up. Okay. And hence the worry is not necessarily from whether this debt will be serviced, and in any eventuality, will there be NPA and haircut? The real question is whether there will be financing available, because a substantial portion of debt is in global markets. As long as the refinancing happens and money is available for growth stroke acquisition, that's the question which investors will be focused upon.
Okay.
Udayan wanted to.
No, Siddharth, I have a different point of view of this. I think it's nobody's case that Adani assets have become NPA today. So I think it's very premature and alarmist to talk about that. But having said that, these are not very small exposures. I mean, to talk about exposure to a group within a handful of banks and then to see it as a percentage of the entire asset base of the Indian banking system, nobody is saying that the Indian banking system will collapse because of Adani. But 23,000 crores of SBI exposure to Adani Group is not a very small exposure, particularly at a time when, the banks have just cleaned their balance sheet. They are starting a new credit cycle. At this point, do you want to convey the impression to your investors that we are actually saddled with many such questionable assets which may in the course of time become NPAs? Like 7,000 crores with the Punjab National Bank. 1.5% of the loan book of IndusInd Bank, if you put all their loans together, is to the Adani Group. These are not meaningless numbers. So I think the problem is with maybe 5 or 6 banks, and it's not just a question of NPAs, it's a question of belief from the investors on whether these same banks will get into a same NPL cycle again in the due course of time, having cleaned their balance sheet, and whether history will repeat itself. Just when we thought that they had learned their lessons from the previous credit cycle, again we are seeing that they have lent to some of these groups which may or may not be in a position to pay them back. And this mistake is not happening with HDFC Bank or Kotak Mahindra Bank or ICICI Bank.
With PSU.
With SBI, with PNB and with IndusInd Bank. So, the same culprits. So, this affects the price to book or the PE multiple of these banks as well, because valuations get impacted by this when people lose faith that their ability to ascertain what is a good asset is very, very suspect.
Aabha, you and I have been asked this question on LIC, and if I can quickly bring in LIC, because we have gone over SBI and the broader question for banks, just some data for all our viewers and our guests to also digest. LIC has clarified that its total holding of Adani company's equity and debt, Udayan, was just a shade under 36,000 crore. As on December end 2022, I repeat that figure to be very exact, 35,917.31 crore, round it off at 36,000 crore. The total amount invested, Aabha, and this was a question that we were both asked in the morning as well, under Adani Group amounts to 36,475 crore as on date. So you can just see the fall that has impacted the total amount invested. That's 36,475. These investments, LIC says, have, however, been made over a period of time. I just wanted to bring the LIC.
Yes, and in some of the other comments coming in, I think Societe Generale has said that assuming no significant change in debt structure over the past year, they estimate that Indian Bank's loan exposure to Adani was close to $10 billion. That's 0.6% of the total banking sector.
Which is the point that Nilesh just now about. Nilesh, Udayan's point, and I can't help wondering at this stage that the last two budgets seem to be a little unlucky for the budget makers. After the two budgets, there is some negative news flow, and suddenly the Adani news flow seems to have forgotten and taken us away from the conversations that we were supposed to have on the budget. By the way, on the screen viewers, also with us, Saurav Majumdar, the editor of Business Today. Saurav, we'll come to you, and Sakshi Batra from Business Today TV, and she has some data that we have. But Nilesh, taking Udayan's point forward, does this mean that the hopes for a certain kind of earning and return from the markets has gone for the near term?
No, I don't think so. Number one, our markets were trading at a premium valuation. We were looking very, very expensive vis-a-vis other peer group before the budget. And those valuations will continue to act as a brake on our short-term performance. But this budget reassures investors on the path of fiscal prudence. It creates growth multiplier through infrastructure investment and consumption boost through tax cuts. So our long-term growth story is not adversely impacted by any event, and investors will continue to look positively towards India, albeit not necessarily at current prices and current valuation. But I certainly believe every correction will be lapped up by investors to build exposure to India. We have also seen fair amount of selling by foreigners, as India was the only market where they were in profit, which was expensive, and where exit was available. Their holdings have declined from 20% plus to 20% minus. It's nearly at probably what was the bottom in last 10 odd years. So effectively, there is not excess investment in India. The long-term growth story continues to be good, but you want to enter at a reasonable valuation, and hence this becomes a buy on dip market.
Okay.
What about Adani itself, Nilesh? I mean, how or what would you imagine that they're going to do next? Because it doesn't take away from the larger plan, and I'll get Udayan's take on this as well, in terms of the fact that they are going to need capital to complete all these projects, to retire their debt.
I mean, I wish I knew the answer, but what we have seen that for corporates to raise money, they probably need three things in today's world: earnings growth, governance, and some commitment to green. This combination of 3G, growth, governance, and green, will be allowing you to tap institutional investors market.
Okay, let me quickly bring in Sakshi Batra here, who's been standing by with some data and numbers, and this is for the viewers who don't sort of track the market so closely. The loss of market cap since the launch of the report for individual stocks of the Adani pack. Sakshi, take it from here.
Absolutely, Siddharth, you're right. I mean, the numbers are mind-boggling right there with the kind of market cap loss that we have seen for the group as a whole and for all the individual stocks as well. For the group, since the report was made public on January 24th, the group as a whole has lost over 8.6 lakh crore rupees in market cap. Now, out of this, the biggest market cap loss in the individual stocks has come in from Adani Total Gas, which has lost a total of 2.4 lakh crore rupees. The next one is Adani Enterprises with over 2 lakh crore rupees of market loss. 1.4 lakh crore rupees gone for Adani Green right there. Adani Transmission also similar amount has gone. Also 62,000 crore rupees has gone for Adani Transmission and Adani Ports for that matter. Ambuja Cement and Adani Power are the next ones which have lost anywhere between 1 lakh crore rupees each. Also when we talk about the kind of loss that we've seen for Adani Wilmar, the latest from the company's basket that got recently listed, that's also lost a considerable amount of market cap, about 1.9 lakh crore rupees over there. And also when we talk about the kind of loss that we've seen for NDTV, the latest acquisition from the basket, 387 crore rupees have gone from that as well. You were talking about LIC and SBI as well, which have a considerable holding in Adani Group. Together, they have lost about 1.2 lakh crore rupees of market cap since January 24th. So that's a massive, massive loss that all of these stocks have had in together.
And that's where the $100 billion figure has come from. Thanks so much for that, Sakshi. Aabha.
No, but I just want to understand, Udayan, that a lot of these group companies, they're not under brokerage coverages. They've not been picked up by mutual funds. How is he going to do this, in the sense that tomorrow, even if you're restoring relationships right now, and you come up with other offerings across group companies, what is the kind of interest level that you're going to see? And there's no clear visibility on that in the immediate term as we look for this to kind of resolve.
No, raising expansion capital I think will be difficult for Gautam Adani right now, because internationally the doors are closing, as you're seeing one every day with Citigroup and Credit Suisse and all of that. And global institutions tend to move in a pack. If two are doing it, two more will do it. And I don't think his bonds will be any good in the near term. Raising money in the Indian market will be very difficult as well, because I think it will be a brave banker who sanctions Adani loan at this point in time with the way the news flow is. So where does he raise the capital from? But now the thing is a question of liquidity. You can stall expansion projects at this point in time. But I think if there is a liquidity constraint which comes in, then it's going to be a tricky one. And I actually don't buy this argument about him having assets which can be liquidated at any point, because liquidating an asset overnight is not that easy to raise liquidity capital. Right. He does have assets, but the question of assets also takes me back a few years to the Anil Ambani episode, because I'm not suggesting for a moment that this is an Anil Ambani situation. At this point, it could well turn out to be, but at this point we cannot say that. But when this Anil Ambani unwinding began, people said, what is everybody worrying about? This guy has powered plants, he has infrastructure projects, Reliance Infra, roads, communication projects, metro rail, and he has a full-fledged flourishing mutual fund empire. So what are you panicking about? And we know how that story ended. So, all these assets, basically my contention is that people in the stock market actually know very little or do very little research about the quality of the assets. Remember Satyam Computers? The best and the bluest breed analysts would go there every quarter after quarter, and he would draw something on a piece of paper, all figment of imagination, and feed it to them.
And the audit reports Udayan as well.
Audit reports as well, and nobody raised a question for years about what he was doing, and was cooking his books all his while. So what sanctity does all this talk about us sitting in our offices and commenting on what Adani Ports has on the ground and what Adani Power has on the ground? We don't know much about this asset.
Let me ask a broader question to Nilesh, because he's not here in his capacity for Adani. Nilesh, thanks for being a sport and taking these questions, because this was not anticipated. But I'm coming to a broader question, and then afterwards to Saurav immediately after Nilesh. Would it be a fair question to ask Nilesh Shah at this stage that post the Adani incident, wherever there is large external debt of Indian companies, the risk premium will shoot up sharply? I'm taking this point beyond the immediate group, and whether there are broader concerns that you feel are likely to emerge.
So again, I don't think so that is likely to happen. For decades, India has received a far tighter spread compared to what its credit rating suggested. Number two, while Adani bonds are getting impacted, other Indian bonds are still trading at where they were trading before. Number three, as US interest rates have gone up and forwards have come down, the cost of borrowing in rupee market is now cheaper than cost of borrowing in global market on a fully hedged basis. There are few institutions like Exim Bank which has borrowed money in global market in recent times, but by and large companies are finding that rupee market is cheaper service global market. And to the Udayan point, when Satyam Saga opened, I was working in ICICI Prudential Mutual Fund. And you can check our portfolios. We had zero holding in Satyam Computer Services Limited. We had asked this question to Satyam management then. You show so much cash on the balance sheet, but where is the return? So it's not that mutual fund guys don't do the research. They do research. Sometimes we are right, sometimes we are wrong.
This was not intended for Nilesh at all. My point was a broader point that all this great research which happens in the on Dalal Street sometimes actually misses the point completely. They are research analysts sitting in their own cubby holes in Lower Parel and they are doing numbers. It's all Excel sheet management.
Okay, quick point before we head across for a break. Do debt investors do much better research? I believe to some extent that happens.
It may, but you look at the behavior of global rating agencies and how many times they have got caught out in the last 20 years. I mean, they are supposed to be the gold standard of this kind of debt-oriented research. And look at how S&P and Moody's have faltered over the people have lost all respect for rating agencies at a corporate level. So, I mean, what does all this research mean? I am not saying Adani Group's assets mean nothing. All that I am saying is that once things start unraveling, they have a habit of unraveling very quickly beyond what you think is possible, and therefore it's prudent to be cautious about how much can be liquidated and what is actually owned by a corporate entity before jumping to conclusions.
Absolutely, but Aabha, we'll have to take a quick break and we'll be back. Do stay with us. We continue programming on the Adani special here on India Today TV.
The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence that will dominate. Nirmala speaks, we decode in real time. Unrivaled, unmatched. Udayan on your side. Budget 2023 with India's #1 budget team.
In 1947, India was a power deficit nation. After 75 years of independence, now we are a power surplus nation with a total installed electricity capacity of over 400 gigawatt. The future looks even brighter. What lies ahead for all of us, we will find out as Sterling and Wilson and Business Today present Scripting a Renewable Future on the 10th of February, 2023.
In 2023, India became the largest population in the world, but still our sustained efforts have ensured that the per capita CO2 emissions are much lower than the global average. The United States emits 14.7 tons per capita, China emits 7.6 tons per capita, and India's CO2 emissions amount to 1.8 tons per capita. We are aiming to bring this even lower, and to find out how, tune into our special event, Sterling and Wilson and Business Today present Scripting a Renewable Future on 10th of February, New Delhi.
Renewable energy is not just the answer for clean and sustainable form of energy, but also for unlocking numerous opportunities. By 2030, renewable energy sector can employ more than 1 million workforce, and this is 10 times more than the existing workforce. What more opportunities can we look forward to? We will find out at Sterling and Wilson and Business Today present Scripting a Renewable Future on the 10th of February 2023. In 1947, India was a power deficit nation. After 75 years of independence, now we are a power surplus nation with a total installed electricity capacity of over 400 gigawatt. The future looks even brighter. What lies ahead for all of us, we will find out at Sterling and Wilson and Business Today present Scripting a Renewable Future on the 10th of February 2023.
In 2023, India became the largest population in the world, but still our sustained efforts have ensured that the per capita CO2 emissions are much lower than the global average. The United States emits 14.7 tons per capita, China emits 7.6 tons per capita, and India's CO2 emissions amount to 1.8 tons per capita. We are aiming to bring this even lower, and to find out how, tune into our special event Sterling and Wilson and Business Today present Scripting a Renewable Future on 10th of February, New Delhi.
Renewable energy is not just the answer for clean and sustainable form of energy, but also for unlocking numerous opportunities. By 2030, renewable energy sector can employ more than 1 million workforce, and this is 10 times more than the existing workforce. What more opportunities can we look forward to? We will find out at Sterling and Wilson and Business Today present Scripting a Renewable Future on the 10th of February 2023. In 1947, India was a power deficit nation. After 75 years of independence, now we are a power surplus nation with a total installed electricity capacity of over 400 gigawatt. The future looks even brighter. What lies ahead for all of us, we will find out at Sterling and Wilson and Business Today present Scripting a Renewable Future on the 10th of February 2023.
In 2023, India became the largest population in the world, but still our sustained efforts have ensured that the per capita CO2 emissions are much lower than the global average. The United States emits 14.7 tons per capita, China emits 7.6 tons per capita, and India's CO2 emissions amount to 1.8 tons per capita. We are aiming to bring this even lower, and to find out how, tune into our special event Sterling and Wilson and Business Today present Scripting a Renewable Future on 10th of February, New Delhi.
Renewable energy is not just the answer for clean and sustainable form of energy, but also for unlocking numerous opportunities. By 2030, renewable energy sector can employ more than 1 million workforce, and this is 10 times more than the existing workforce. What more opportunities can we look forward to? We will find out at Sterling and Wilson and Business Today present Scripting a Renewable Future on the 10th of February 2023.
When it comes to harnessing the power of sun, India ranks 4th in solar PV deployment across the globe, with total installed solar power capacity reaching around 62 gigawatts. Join this journey of making the planet brighter and cleaner at Sterling and Wilson and Business Today present Scripting a Renewable Future, 10th of February, New Delhi.
In 1947, India was a power deficit nation. After 75 years of independence, now we are a power surplus nation with a total installed electricity capacity of over 400 gigawatt. The future looks even brighter. What lies ahead for all of us, we will find out at Sterling and Wilson and Business Today present Scripting a Renewable Future on the 10th of February 2023.
In 2023, India became the largest population in the world, but still our sustained efforts have ensured that the per capita CO2 emissions are much lower than the global average. The United States emits 14.7 tons per capita, China emits 7.6 tons per capita, and India's CO2 emissions amount to 1.8 tons per capita. We are aiming to bring this even lower, and to find out how, tune into our special event, Sterling and Wilson and Business Today present Scripting a Renewable Future on 10th of February, New Delhi.
Renewable energy is not just the answer for clean and sustainable form of energy, but also for unlocking numerous opportunities. By 2030, renewable energy sector can employ more than 1 million workforce, and this is 10 times more than the existing workforce. What more opportunities can we look forward to? We will find out at Sterling and Wilson and Business Today present Scripting a Renewable Future on the 10th of February 2023.
When it comes to harnessing the power of sun, India ranks 4th in solar PV deployment across the globe, with total installed.
Welcome back. You're with us here on India Today as we deep dive into the Adani saga, how it's unfolded and the resulting impact. With me, I have Siddharth Zarabi, Managing Editor, Business Today TV, Udayan Mukherjee, Global Business Editor, India Today Group. Also joining us, Barnik, Chitran, Maitra, Managing Partner, Arthur DeLittle, India and South Asia, Mr. Chokkalingam, Founder, Equinomics Research, Abhishek Basumalik, Founder of Intel Sense Capital, Saurav Majumdar, Editor, Business Today magazine as well. We'll be diving into this and getting everyone's view. But first, let me just take a look at those Adani stocks as they've closed today. Markets have somewhat recovered and closed just about in the green. But Adani stocks, Enterprise is down 27%, Transmission, Green, Total Gas, all of them down 10%. Ports also down about 6-7% as we finally see those prices settle just after the closing bell. Udayan, what do you make of this fall? I mean, they're all oversold now. What's really next for these Adani stocks, and how should investors look at them?
You know, they've fallen quite a bit in a straight line already. So at some point, the pace of the fall will get arrested. There might be a bit of short covering as well at this point, because, you know, you've lost 45-50% in some of these names in a very short period of time. But I think you should now, it has come to a point where you should look at the different group stocks differently. Adani Enterprises is a tricky one, and I'm not surprised it's falling the most, because it's the vehicle, holding company vehicle for the new enterprises. If liquidity dries up completely, this one is going to be hit the hardest. And the market senses it, and therefore it's falling at the rate of 26-30% a day. The one thing which I would caution investors about, and I hear a lot of people talking about how one should buy the assets, stocks, because there are underlying assets. And I want them to think about one company many years ago. It's a prominent brand, GVK Power. I remember it was a very high flying stock on at that time. Yep. It had airports, very swank airports. You would have passed through them. Yes, it had power projects, etc. All of that. And the stock is trading at 2 rupees today. It's become a rank penny stock for the last many years. Assets do not equal stock price, and GVK is the biggest example of that. Having said that, there are a few companies in the group which actually are falling because of their sentimental connection with the Adani name, which is a stock like Ambuja, ACC. Yes. Till a few months ago, they had nothing to do with Adani. They were good companies in their own right. They are world-class cement assets. They have good cash flows. They have a proper balance sheet of their own. Now they are Adani Group companies. So their fall of 10% a day is actually it's a sentimental fallout more than an actual fallout. So if you have to look at an investment option, I would say that those are far cleaner options, unencumbered options in the Adani Group that you can be looking at, rather than looking at the Adani Enterprises kind of names. So I think the time has come where you look at different Adani Group companies differently, but I think the ones which are generally recognized as high-class assets, and I would put Adani Ports on top of that list, because it is a good asset, I think that will probably start falling the first. So whenever the route stops, you will see that the buying comes in first in Adani Ports, much before that probably in the cement companies, before it trickles down to some of these larger umbrella kind of companies in the group.
Got it.
All right, Udayan, thanks very much for that perspective with us here today. And let me head across to Saurav. Saurav, Udayan made that broader point and went back into the past with regard to other groups, and And the point that he honestly made, which I think most of our viewers should focus on in all of this noise, assets do not equal stock price. Sort of come in on this, the risk and the change in strategy that Gautam Adani has taken, does it restore his sort of image, or do you think he has still some way to go as far as this episode is concerned?
No, I think, Siddharth, the point which Udayan made about stocks not equaling assets is absolutely spot on. I think we've had far too many examples which he cited, so that point is well taken. As far as Gautam Adani's way forward is concerned, and after the FPO was pulled back, I think he really had no option. I mean, look at the way the stocks have taken a mauling today once again. Imagine having the FPO fully subscribed with those kind of shareholders coming in and helping him out. And then yet again, the very next day, you have another stock rout. And this, in my view, I think is likely to continue for a while. I don't think, I mean, if it had restored the faith or whatever, you know, you would have had slight difference in terms of the way the Adani stocks would have moved. But that's not happened. So clearly there is, there is yet a lot of sense of, fear about as far as the Adani Group is concerned. And those are the things which Mr. Adani himself will have to start addressing if he really wants to go back at some point into the global markets, which he will have to. Because you remember, and I want to say this is a wake-up call like no other, not just for the Adani Group, but for the banks, also for the stock markets, in terms of the way the stock had moved up last year. So I think, this kind of, this development is most unfortunate, of course, because nobody likes to see this kind of developments in the market all across, a sea of red, and everybody really moving around in fear about what's going to happen next. But it is a wake-up call, and banks, like you all were discussing earlier, I think also need to take stock of how much they can lend to which groups and do due diligence, far better due diligence, and understand and ask the detailed questions, which I think is the issue out here.
Let me go across to Barnik and get his perspective on the governance angle here. And Barnik, you worked with several companies. You've seen the inner workings, the governance styles. I mean, what are your takeaways from this entire episode? I mean, is the image of the group tarnished? Can they make a comeback from this? What are we lacking in terms of transparency here? What more could have been done from a governance angle?
No, I think the group's image has definitely taken a beating. I think what is also probably not helping is that very sensible analysts who've gone through the Adani response to the Hindenburg research have found the research response to be reasonably inadequate. I think the approach the group has taken is to state that they're compliant with local laws and statutes, which I think is a sensible approach, but is not enough given the scale and size for the group. I agree with Fauruq's point that this is a wake-up call. I think no Indian conglomerates have been perfect in the first 5-10 years of their existence. So they have got better. But if you have to be of the size and scale of the Adani Group, you should hold yourself accountable to corporate standards, which are world-class and not just statutory expectations from the local regulator.
Absolutely. Mr. Chokkalingam, coming to you very quickly. What next really for Adani Group stocks?
Yeah, there are three issues, to be very brief. One, the ethical issue which he has addressed. I think cancelling was a good move. It would improve their reputation. Second is the issue of valuation. Of course, I don't have any buy or sell call, but I just want to say that market structure has changed a lot in the last 10 years. The correction or reward, they are very so steep and very short, quick enough to do that. So soon, they might find some valuation the way they are falling every day. Then third issue is about aggressive acquisition. This is where Mr. Adani, if I believe personally that if he focuses on the existing businesses and he postpones the further acquisition through debt, if he makes that kind of vision statement, I think it could be positive for the group.
Thanks, Mr. Chokkalingam. We are running out of time on the show, but I have to go to Mr. Abhishek Basumalik, who's been waiting by very patiently. Abhishek, the same question really. What next, and what next especially for a lot of retail investors who may have been burnt in the overall market carnage?
So I think first of all, we have to understand that the business and the stock, we need to make a differentiation between the two. The business, what is going to be more important is the cash flows and their ability to service their debt, right? I think what we've heard till now, what we understand is that in the next at least foreseeable future, it's going to be difficult for them to raise equity or debt very easily. So very quick expansion is going to be difficult.
Right.
Coming to the stock part, I think, typically what happens is, forget the name of the company. Anytime you've seen a very, very sharp rise over a sustained period and then a stock crashes, what tends to happen is it tends to consolidate with a downward bias for a long period.
Absolutely.
It could be the Infosys of the 2000 era or all such stocks. Provided the business continues to survive and do reasonably okay,
right,
it might take years for the stock to actually decompress in terms of the margin. I mean, in the PE multiples.
Absolutely, and that is the bounce back that we will have to wait for. But we are completely out of time on the show. Aabha, we got a mix of views, and clearly the Adani stocks will continue to remain in focus. Aabha.
Remain in focus and most likely continue to suffer on the lower side of things until we see some kind of stability return. But for the moment, sharply in oversold zone, 40-50% down, and it doesn't look like it's getting any better for the Adani Group stocks. We'll leave it there for now. Thanks so much for watching.
Goodbye.
In 1947, India was a power deficit nation. After 75 years of independence, now we are a power surplus nation with a total installed electricity capacity of over 400 gigawatt. The future looks even brighter. What lies ahead for all of us, we will find out as Sterling and Wilson and Business Today present Scripting a In 1947, India was a power deficit nation. After 75 years of independence, now